In today's video, we're going to talk about the S&P, and we're going to start with some of the charts that I started with this morning. And the first one was S&P Cash monthly chart. Okay, I didn't have enough back data to find some of the largest declining swings on my weekly chart, so I had to back it up to a monthly. And what I did find was that we had, let's see, a prior major decline that was 909.30, and I took that and projected 100% of that from the high. That gave us the area of 24.84, and then there was also a 618 retracement of a major low to high swing that came in well, quite a ways below, but 24.14.97. But that was a general area to watch for possible support. And then what else we looked at was I ran the timing after, we did have the cycles in February that were suggesting a possible high, but again, it just was such a wide zone. We had to fine tune that with the daily cycles. But now we're going to do the same thing. We're going to look for the next possible low. I did run the histogram from this last high on the weekly chart, and it shows pretty much the week ending now and the week ending next week as far as a window to potentially put in, an intermediate low. At this point with this market though, what is an intermediate low? Anyway, so we did have timing there, and I'll show you the timing histograms that I use from Dynamic Trader. So basically this was what I had run for the S&P Cash weekly, and you can see that these were the highest scoring dates, which just means that there's a cluster of timing cycles there. So you can actually look for the cycles underneath here and you'll see what's there. But notice the standout dates. The weeks ending actually March 6th and the week ending March 13th, but then you have to go plus a week. Okay, so it could also include up to, the week ending the 20th. But what we want to do is fine tune this by looking at the daily timing. And not only did we have, we actually had cycles originally from 9th through the 13th. Okay, but we did go through the first couple of cycles, but check out the fact that we had 1, 2, 3, 4 other cycles between March 11th through the 13th. And let's see, and you can see this histogram below the chart. So let me show you what that looks like. So all I did on the daily chart was project from this last high for the next possible low using this histogram. And here you can see the high scoring dates, so you want to see relatively what is high versus, it doesn't matter as far as the number. Okay, it just matters relatively where is the standout. And we had standout between March 11th through the 13th, pretty much the same cycles. So that told us to anticipate a possible bounce, but it's a bounce within a downtrend. So the next big thing that we're going to look at is the resistance on the way up. And okay, so since I had shut my charts, it kind of disappeared, but we do have, let me just grab the charts from my file instead. Let's see if we look at the S&P in this grouping. All right, so nope, not the S&P weekly. We want the S&P on the daily chart. Okay, so here's the S&P, and yes, we do have timing for a low and a bounce via the histogram, but guess what? You can't consider that this is a major low. Okay, yes, we had some time and price parameters. You had pretty much price on the monthly chart and timing on both the daily and the weekly charts, but it's still a bearish pattern. Price is still below the or below the 200, below the 50, and the 5 and 13 are still in a sell mode. So I am not convinced that this is a major low, and we also have to watch for possible failure on the way up. So these are potential selling opportunities, I guess, depending on what kind of news we get over the weekend. And the way that you use this work anyway is pretty much setup plus trigger equals trade entry, and then you manage it. So this would be a setup. Let's say if we do not clear this area of resistance, you can go down to a lower time frame chart and look for a sell trigger against it, and then define your risk just above that area. You know, I mean, I don't want you to sell it here and risk above here. I mean, because that's probably the definition of insanity at this point. So anyway, that's what I'm looking at. I'm thinking that this timing so far is just a, a short-term bounce within the downtrend. And I'm not going to be convinced until I see something shift as far as the moving averages are concerned, and also the important resistance decisions that we would need to clear if this was indeed a more important low. Anyway, have a great weekend. I was gone for a few days in New York, and just thankful to get back home.